People come into crypto because they start to believe that blockchain and cryptographic encryption will allow the internet to do things that it couldn't do before. But then when they come in, they often start throwing their money at meme coins or whatever crypto projects that all the major YouTube channels are talking about. And they wonder why they don't do very well. Well, all crypto really is early stage investment in businesses, some of which will absolutely change the world with some of the technology that they're doing. And some are just fun little plays, meme coins and other things. And so it does help that I've been in the crypto space for 7 years to really help me see past a lot of the crap that I feel is out there in the crypto space, because I want to narrow in on some of the projects that have teams with experience that see a way that blockchain can possibly bring greater efficiencies to problems that maybe Web 2 is already solving, but that Web 3 can solve much better. I like to find those projects and I like to invest in them in early stages and then wait. Now, this approach worked out for me really well since I really started this approach back in the previous bear market, 2018, 2019, going into the 2021 bull market. And because of that approach, I was able to retire and just manage my own fund. Now, during this past bear market, I've been looking for the projects I think are creating something special. Our guests today are from a project that I've been following for 3 years. What they're doing is recently live and working very well. It has not yet hit mass awareness, but I think you will agree with me after this interview that this is the biggest innovation in DeFi since Uniswap. Welcome to the Crypto Rain channel and our family. If you, like me, came into crypto because you realized the potential for life-changing gains over a 4 to 8 year period, and you're looking for discussions on becoming a solid, unshakable, even savage crypto investor, like a Navy SEAL of crypto investing, you're in exactly the right place and with the right family, the Rainmaker family. Do note, I'm not a financial advisor. I'm a crypto investor myself. I absolutely own the Bumper token and plan on buying even much more. I love it at the current price. Now, whether you do or not is fully up to you and not really important to me. What is important to me is that I bring you these guests so that you hear from them yourselves, so you can make a more informed decision on what you think about the company and what they're doing and the people behind this company. We do want to thank our Patreon members. We do have a private Discord that our Patreon members only get access to. If you haven't already, make it rain on that like button and strap in for the show and help me welcome Jonathan and Gareth from Bumper.
Hey, Crypto Rain.
Hi, mate. How are you? Thank you so much for joining us.
Yeah, thank you. Thanks for having us.
I saw your interview, Jonathan, with Randy and Jordan on their channels. Great interview. I learned some new things on that interview. For anyone who didn't catch that, it was great. And you might, after this, go watch it. Now, gentlemen, there might be some people joining this that haven't heard of Bumper before. So for them, what is Bumper?
Yeah, so Bumper has a very simple objective. It is a DeFi protocol that uses smart contracts to protect the price of your Bitcoin or Ethereum. They're the two assets that we, out the gate, that we can protect. And you can go to the protocol and it is simple as clicking, I think it's on 5 or 6 clicks. You can have your asset protected. You choose how long you want that protection to be. You choose what price you want to protect. And the protocol then kicks in what is a very kind of complex machine that will then ensure that the price of your asset never falls below the floor. And this this is quite a kind of new product because it stops the price going down below the floor you've protected. But if the asset, as you've seen recently with Bitcoin, super pumps, the price has rapidly risen up, then you will benefit from that. So when the price goes up, you are in that asset and you capture those gains. If the price comes down, you will not fall below the floor. And for that protection, for that kind of insurance policy, you pay a premium, which is streamed to you every day. And if you kind of, after 2-3 days, feel this isn't for you, you can cancel that protection at any point. So Bumper is a highly efficient, highly versatile, and highly innovative tool that protects the price of your crypto assets.
That was a great answer. You explained that so eloquently. I recently spoke to a friend who works advising a hedge fund, and I asked him why he was still staying away from crypto. And he said he was waiting till there was a more mature options market. And I don't know how closely he follows, crypto and options, but it was curious that he brought that up, because I did tell him a bit about Bumper. But I'm not an options trader advising a hedge fund, so I don't know that I share it in a way that he understands it. For somebody who is deep in this space like he would, how would you explain Bumper to someone that has extensive options as a background, and why would they not just use regular options?
Okay, all right. So let's look at options then. So this is the options market was predicated on a formula, an equation that was authored 50 years ago by two university professors, Black and Scholes. And that formula actually turned out to be incredibly powerful. So it won them the economic prize for the Nobel Prize for Economics. It gave rise to a $13 trillion options market that we see in traditional finance. And it turned out to be, a very powerful and useful tool. There are, however, some problems with options when you apply it to crypto. First of all, options on chain just don't really work. They don't work very well at all. And so the biggest provider of options is a company called Deribit. Unfortunately, they do not allow US customers to access their site. So if you are a US fund with significant exposure, you are really a bit of a sitting duck when it comes to kind of crypto. You can't kind of tap into the liquidity in Deribit, and the traditional option offerings on chain just don't work, or they're just super expensive. I mean, it just makes it commercially kind of unviable. So we kind of looked at that market, and we thought that there must be a way that you can provide, first of all, an options alternative which is on chain and works well when it's decentralized. But also we kind of thought, well, look, it's 50 years since that equation was formulated. That's a long time. That's a super long time in tech, and that's a forever time in crypto. And so we put our minds, along with some significant VC backing, to see if we could author a more appropriate mechanism to allow crypto holders to protect their assets while on chain. And very simply, and this is probably just a kind of childlike explanation, but it's the one that I think kind of allows people to kind of get an idea how Bumper works under the hood, is that if you protect, say, Bitcoin and it's $100, and you say, well, I want to protect it if it's I don't want it to go below $99. Okay. So if the price goes up of Bitcoin, you've protected it with Bumper, it goes up to 101, 105, 110. That's great. You're in Bitcoin. The price then drops. As it falls down and hits that $99 floor that you're protecting, the protocol would, in a simplistic way, swap you into stablecoin. And if the price then continues to drop, to 80, 70, 60, 50, you've now been kind of frozen at $99 in stablecoin, and you can then just withdraw that, and the protocol will pay you out in stablecoin. But importantly, if the price recovers and pushes back through 99 and beyond, you're then swapped back into Bitcoin. So there's the trick with Bumper, the really kind of complex intellectual property that we had to devise, is if you've got a pool of lots of people who are protecting their Bitcoin, all at different floors, all for different lengths, how do you possibly combine that into one big pool, charge them a premium which is appropriate for them, and most importantly, how do you rebalance the pools so that overall the protocol is kind of thinking, well, the price of Bitcoin's dropped. Overall, I've got quite a lot of risk exposure to the floors. I'm now going to trade some of the Bitcoin out for stablecoin. And this is the juggling act that the protocol does under the hood, which was very difficult for us to simulate, which is the approach that we took. We built an agent-based model. We literally threw millions of dollars of research and development in perfecting that. And we then have constructed smart contract code, which is always monitoring the market, monitoring parameters, and just making these very adept rebalances to make sure the protocol is always kind of solvent, to make sure that people's floors are protected. It's a totally new way that protection is offered. And as I said before, there are kind of a few main benefits. There are three that we've identified out the gate. One, it is just cheaper. And that depends on individual cases, individual kind of positions that open. But I can tell you from one user who opened up positions in the hundreds of thousands of dollars, their protection cost was 96% cheaper than Deribit. So we are radically shaking up the protection cost. The second thing is the protocol is really, it allows you to take exactly the type of protection you want. So if you say, I want protection for 1 week starting today, and I want to protect a 99 floor, Bumper can offer you that. With options, you go to a marketplace, it might just say, well, we've got an option to protect you for 3 weeks starting tomorrow at 70%, and you either take that or you don't. So Bumper is actually able to give you the type of protection that you require. So it's really efficient and very versatile. And we are now in the stage of the business where we're out of the research and development. The protocol launched on Ethereum because of its complexity. It didn't really work there commercially because the gas costs are so high. We subsequently migrated to Arbitrum, where the gas costs are now just minuscule. You're talking like cents that it might cost you to open up a position. And we're now in a position finally where the protocol has a clean bill of health. It is stable. It offers really good yields, up to say 20% for people that want to put in USDT and earn a yield. And protection costs are extremely, extremely low compared to what the market offers. So if you feel the market's a bit pumpy and you want to kind of say, well, I want to put a placeholder in there to protect my Bitcoin, Bumper is the protocol you should use.
That was a great overview. Yeah, and very detailed answer. What you're doing is a new way of thinking about it, right? So one of the traditional methods is a stop loss, just simply a stop loss. When it goes below a certain point, just sell it all to stable coins is what it'd be. So how is this different than a stop loss?
Well, I mean, a stop loss is a really important tool, right? The problem with it, and I've been caught out with this personally trading, is that you can be wicked out of your position. So what can happen is, you go to sleep at night, the market takes a very steep tumble, it crosses your stop loss, you're then cashed out, but then literally seconds later, the market then kind of pumps, leaving you behind in stablecoin. So you kind of wake up, see the market's pumped, but you've not captured that. That does not happen with Bumper. You are protected on the downside, but you also will capture the upside if the market recovers. No one else offers that type of protection.
I love that. I've totally been wicked out like that. That my thesis was completely right, and it was wrong for about 25 seconds before it was right, meaning just this frequently happens.
Yeah.
Strong wick down, wipes out all the leverage, then it runs up, and you're like, frick. Yeah. Makes it even hard that you're right, but then you're, you get wicked out of your position just because of a wick. Now, so you launched the protocol a few months back, and you've already bridged it over to Arbitrum, and it's running well. What are some of the next steps that you're working on?
Yeah, that's a good question. I'll kind of start on this, and Gareth, I know you have some kind of direction on this, but the interesting thing for us is, first of all, I don't want to underestimate how difficult it was building Bumper. I think a lot of people, certainly in traditional finance, will say, well, you're trying to build a money machine. It can't be done. No one's ever done it before. People kind of said that, the maths behind it will never work on chain. So in reality, it took us, years of research and development. It took 3 or 4, we're probably on our 4th development house that we burnt out. And it ended up being what we consider one of the best development houses in the world that contacted us and said that we think we can build this for you. And it was the toughest project they ever worked on. In fact, one of their coders is still signed off by his doctor because he got really burnt out. It was a monumental effort to build this protocol. Now that that's done and it's stable and it's working as expected, what we realize is that we can start to tweak this machine to do some really cool things. And so we're just in the process now of kind of testing some of these ideas out in simulation. That's our methodology. We trial that in agent-based modeling. We see if it puts undue stress on the protocol, if premiums are going to be too high, or if yields are going to be too low, and we can kind of sense check it. Now, I'm not going to tell you what feature is going to come through because we're in that process. However, there are things that we are trying with Bumper, such as one of the ideas is a trailing stop loss. Sorry, a kind of trailing floor. So the way that would work, the headline for this is that you could use Bumper, and Bumper would guarantee you, if you say you took protection for a week, it would guarantee it would lock in the all-time high of Bitcoin in that week. It would secure that price for you and protect that price for you. So that's one of the things that we would like to trial. We also would like to see if there's a way that we can kind of add a leveraged positioning. So if Bitcoin goes down, yes, you're protected. If it goes up and it passes a certain threshold, wouldn't it be amazing if the protocol then kind of leverages you into Bitcoin? So you become 2x, 3x, 4x, 5x leveraged, and you could then sell out at the top and take that kind of leverage gain. So there are a couple of the ideas that we're trialing in Sim. Gareth, are there any other things that you kind of, have interested you in that we can build on top of Bumper?
Yeah, I mean, one of the critical things that we would like to crack is a fungibility thing. It could very well be a gateway to access a lot of other external protocols. Where you could, essentially Bumper an ETH or Bitcoin or whatever, and then just take that fungible token and rehypothecate it into all kinds of different protocols out there, utilize it for lending and borrowing and all that kind of stuff. So I think but that's definitely quite a difficult task, and one that is tricky for the way the design works in its current state. So that's probably a bit further down the line, but it's certainly one that's on the list for sure. But some of those quicker wins, like what Jonathan said, the kind of trailing floor, leverage, are definitely things that we think the traders will appreciate and utilize. So that's one of the things. One of the bigger things we're also wanting to focus a bit more on is token economy. So we know that the token, like you said, it's a pretty tasty price right now, and we've had some really good gains in the last month, even with the dominance of Bitcoin. I think we've had upwards 30% price increase or something like that in the last month. So that's been really positive. There's definitely a lot more buying of the token happening at the moment. So we know there's interest, and what we want to present very soon is fundamentally a proposition of where the bump utility will lie. So we've put out papers in this before, and we have explained some of the things, but we're going to expand that a bit further into all kinds of things. So bringing back a bond and possible tiers, where kind of loyalty tiers and stuff like that, staking modules, and then a really good integration between all kinds of use cases of the pump token. So we do envisage quite the ecosystem, and we want to start moving forward on kind of expanding that out, because fundamentally, people also want to, get their alpha on the bump token. And the critical thing is that any token, and we're strong believers in this, has to have a very good utility. So we have embedded that into the design. We want to execute on that now. And that might look like very simple thing, staking, creating a staking module, which is what you could call a kind of at-risk position, but you will earn really good rewards. It's there to help support the protocol long term. a bit like the RBase safety module is a really good example. And if we can provide something like that, there's a bonus that it actually helps the protocol and a bonus for the users that support the protocol in staking rewards. So there are a few things there. Hopefully we'll have a document in the next couple of weeks where we can kind of expand out on that.
Yeah,
And,
I mean, I think
where the token can go.
I think Bumper's at a very kind of interesting stage where, you know, the technology stack has been built. We can now tweak in features that we think are going to be really compelling. We find ourselves in you know, what looks like a kind of super cycle of crypto. So we are very diligently and considerately trying to you know, kind of look at, as Gareth said, the token economics from a token holder's perspective. So that means kind of making sure that everything that has been emitted is now kind of emitted, so people know that the tokens are really kind of out on the market and there's no more kind of surprises coming there in terms of kind of a deflationary or an inflationary problem. Making sure that there is a solid use case for the token, so kind of bonding, staking, and governance, migrating over more control over to the DAO. And so we are positioning Bumper to be one of those projects that you read about that really kind of has its housekeeping done. The technology stack is strong. It's got momentum of users. It clearly has a use case. It's clearly more efficient than its competitors, and that you start to have a flywheel effect where the protocol and the business really start to kind of capture that kind of bull market that we can see in front of us. Are you just on mute?
There we go. What I liked about one of the directions you took is that you did build this on ETH, and that was probably painful because you then didn't really want to be on ETH. But by building on ETH, you could then make it compatible with all the EVM chains, right? Such as the move to Arbitrum, you thought it might take 3 months, and you were able to complete it in just about a month, which then also makes it so you can expand to other EVM.
Yeah, there are a couple.
Chains.
Yeah, exactly. And there are a couple of things. Yeah, that's exactly right. It does open up the doors to other EVM compatible chains. It's also just a kind of case of like a little bit indicative of the journey that we've been through, because actually to build this, you know, naturally we want to go on ETH. That's where the biggest market in DeFi was. And so from a you know, business perspective, it was certainly a better decision. As it evolved and the complexity of the protocol became far more apparent, it became quite difficult with gas costs. But what that made us do was find a lot of very efficient ways of bringing those costs down. So it kind of sharpened the pencil for us to try to get those efficiency in. And then once we kind of got to a point, you know, and we could safely say we deployed on Ethereum, but the reality was that for a lot of smaller investors, if you're putting in 100 grand or $1 million, it's not going to make a blind bit of difference, the Ethereum costs. But building for whales is not what crypto is about, and it's not what we're about. And so what we wanted to do was make it more accessible for someone who wants to put in $500 worth of their assets and protect it. So naturally, Arbitrum kind of, you know, we felt was a better DeFi chain, and we moved to there. But yeah, it certainly made us sharp and open up some EVM compatible chains in future.
I wanted to, like, I didn't realize, so I've been interested in Bumper since 3 years ago when I read your white paper, and I was like, oh my gosh, you know, if they're successful at this could radically improve finance, not just crypto, but this could be used on other things. And it was, if they're successful with this, I'm really pleased with the progression and the work you put in over the bear market. The bear market gets really boring for us investors. And it's a great time to really research. And in my opinion, I've been stocking up tremendously that I think are massively undervalued. I'm getting a serious echo all of a sudden. Okay. Looks like it's gone. Now, let's talk more about what you can do now with Lido staked ETH. And could you explain in that what Lido staked ETH is for a lot of people that haven't followed DeFi very closely?
Gareth, do you want to take this one? I think you've had a good handle on this.
Yeah. I mean, Lido, was really innovative, and it allowed people who, with ETH 2.0, could stake, and they didn't need to present the collateral levels to run a node and whatnot. So they did some clever things with the actual token. They used a rebase token that allowed you to basically take that token and put it into various different protocols. So that kind of nature of it was quite positive. For us, like we were talking before, when we deployed to Ethereum, that was a really great time for us. It was really like a live beta test that gave an opportunity to get a lot of good feedback from the community and users, and even ourselves as users. We were playing around and thinking, well, what would be better? And we isolated probably 4 different tokens that we felt were 4 tokens that were kind of key tokens to probably look at for Arbitrum. And the actual, I guess, volume and of staked ETH was quite high. We felt that would probably be a better one to go with, as opposed to a kind of native ETH, standard ETH, because people will often, well, I want to protect my ETH, but at the same time, I'm trying to get yields on it. So it seemed logical to actually just, be able to wrap the staked ETH, and then bumper that. And, there were definitely some tricky things involved in that. That was all part of the Arbitrum kind of L2 process. And for sure, I think what it does is it allows you to take great comfort in that, even the fact that in some respects, the staking actually subsidizes any premiums that you might be paying as well. So this kind of makes it more economical for anyone.
I mean, I think that is the kind of the unspoken heroic feature, I think, of crypto is the notion you can take an asset, I can then stake that, generate a yield, but you are returned back a fungible representative token of your savings, and you can then rehypothecate that. So, for instance, you could provide liquidity into Curve. You could then take your token from Curve and rehypothecate that into Convex. Now you've got 2 different protocols which are generating a kind of yield for you. You can then, potentially, if we have that fungibility aspect solved, you can then kind of put that into Bumper, and what you would then have is a yield-bearing token that's now protected from a certain price floor. And if you could then rehypothecate that within the DeFi ecosystem, then I think you now have properties that has never been seen before in traditional finance. You can't do that in TradFi. This is now just a one game in town, being crypto, allowing you finally to do some very clever things with digital money that you just can't do in a traditional finance.
Yeah, it's fascinating. And you had talked about that potential. I guess I heard it for the first time about a year ago, and I was like, that will be mind blowing, that you can take something, protect it. And you take something like Lido wrapped ETH, which is then you're earning the yield on ETH. Now that ETH, if you stake it, can earn you a yield. But for those that aren't following closely, in order to run your own ETH node, you have to have, how many is it? 21 ETH?
32, I think. Yeah.
32.
Yeah.
And then you have to run your own ETH. And Lido put together a program that you can basically get Lido staked ETH, and you can still earn a majority of the reward, and they take some of that as a fee. And so you can essentially earn a yield on your ETH without having to worry about staking it. And then Bumper's like, let's then let you stake that. So the yield that you're earning somewhat offsets your premiums. Depending on how high the premiums are or how high the yield is, might completely sometimes offset the premiums, which is absolutely genius. And it's just one of the use cases that I think are going to come about with this new thing that you've created. I think a lot of the options are yet to come. I remember the foundation of one of the major components of DeFi, which was Uniswap. It just started as this silly little project by a guy who wanted to be able to allow liquidity to happen for tokens that nobody was trading. and it turned into one of the biggest innovations.
Yeah.
It's been a key component of DeFi, right?
Yeah.
And so sometimes you create something, but all the use cases that can then interact with it come over time.
For sure. I mean, I think when you
that's a good point.
I think when you look at kind of DeFi, you know, certainly, you know, Gareth and I were talking about this recently, that, you know, the pooled liquidity turned out to be a really important development that allows lots of different things to be built on top of it, right? And automated market makers was just a game changer, because all of a sudden now you just didn't have to use a centralized exchange. It meant that protocols like ours can now trade in the ecosystem in a permissionless and trustless fashion, and have that, you know, like you say, that instant access to be able to trade Bitcoin for USDC or any other thing on the spot with very little kind of friction. And I think Bumper, we think, is just another kind of step forward, in that basically what we've created is almost a kind of automated market maker for options. This is a machine that can deal you out the protection that you want instantly, absolutely crafted to the type of term and protection floor and risk that you want to have, and it can do it in seconds, and you can close it in seconds as well. So you have all that freedom and control that you get with kind of pooled liquidity and automated market makers. And for the first time now, that's in that kind of in a new market. And we are the only people that offer this. No one else has done this, you know. So, you know, we are the only ones that are not based on the Black-Scholes formula. We're the only one that offers the exact minutiae of the type of protection that you want, and we can serve that up to you immediately. No one else out there has that capability.
So now here's the question I every once in a while run across. If this is such an innovative idea, because they've been using options pricing based on Black-Scholes for 50 years, such an innovative idea, why did nobody do this before?
Well, I think there's a couple of things there. So this works really well in crypto, it works really well on chain. So you kind of had to have, you know, we're kind of standing on the shoulders of giants. You know, you had to have some of those developments within the marketplace and the tooling to allow something like Bumper to kind of sit on top of that and kind of go, right, okay, I've got Uniswap, I can kind of make trades. I've got pooled liquidity. You know, I've got a kind of infrastructure that has low latency and high frequency. So all those kind of pieces on the chessboard had to kind of come before we could kind of go, right, we can now build on top of that something that hasn't been seen before. So I think it's just, you kind of just need that evolution of technology piece to kind of get to a critical point before you can then build on to the next step. And as Gareth said before, we're now just super pumped. What can we or others build on top of Bumper that can now kind of push forward? But to answer your question, you know, you kind of have to, you got to wait for the technology stack to mature before you can then build the thing you want to do on top of it.
I think also, like, you know, the reality is it's extremely complicated, and to do something like this, even in DeFi, was really hard. I mean, we're living proof. It took us years. And I do feel that up until this point, there have been a lot of protocols that are quite simple. Like, you know, fundamentally, they work relatively well. There aren't a huge amount of smart contracts interacting. There are such complexities in writing and Solidity that, you know, to avoid certain attack vectors and all that kind of stuff, it's quite a daunting thing to do, what we've just done. And, you know, no small thing about things like Uniswap and all that. But in the early stages, they were much simpler and have evolved. So we kind of went to a point where, well, we've cracked a very difficult problem, and we will hopefully have all those kind of developments over time. And as it becomes more open source and all that kind of thing, then we'll get other developers coming in and thinking up other cool ideas and great things that they can do with the protocol. So yeah, for sure, you know, it starts off small, and then once people understand the utility and what they can do with it, and flexibility and all that kind of thing, I think we'll expect to see quite a bit built on top.
I've seen a lot of messaging lately about like the 3 points of what you can do with Bumper, which is earn, which is like people can provide some stable coins into the mechanism and earn a yield on it. Protect, which is you can protect your position, but a lot of messaging lately on trading. What is that about?
Yeah. Do you want me to? Yeah, I mean, trading is, when we first kind of started messaging about Bumper. Obviously, we think we've got something really unique. And the protect kind of concept is fundamental to what it can do. But it probably only really talks to a certain market out there that maybe want to buy an asset and just hold it and kind of just make sure that they're okay. And they're not as active. Maybe more swing traders or just long hodlers, you know, and it just, you know, it's an important part, but it's one of those, a particular market. Trading, when it comes to crypto, what we know is that everyone wants to make a lot of money. And I think, we always talk about degens in crypto, but I think like crypto people are generally pretty much degenerates. And they are about getting their alpha and you know, maximizing their yields when they're in stable coin while they're waiting to buy. And then maximizing when the bull market hits, and making sure that they can manage the kind of bear drops and whatnot. So we're trying to appeal a little bit more to the trader, and what we're doing is we're trying to demonstrate ways of using Bumper as a trader, different kind of strategies. This is going to evolve far more over the next few months. And we're also running, you know, example, we have Bumper Intern who's doing a very simple but aggressive play on Bumper and yielding quite well at the moment. And we expect that when it does retrace, and it will retrace at some point, that the Bumper Intern is going to clean up pretty well. So what we found is that by trying to adjust messaging to what the audience really is doing and what Bumper can do for them, into more trading and the kind of earning yields, then hopefully we're able to tap into the markets that are actually interested and will use Bumper in a massive way.
That makes sense. I've seen that on the plan forward, some of the things that you're working on is a product expansion, referral program, trading competition, and phase token utility. Could you go through those 4 things, starting with product expansion?
Yeah, well, I mean, I think we've touched on some of the things that we'd like to kind of add on. So we are now kind of in the game of kind of very quickly iterating on top of Bumper now. So we expect to have some new products and features of the protocol out in the next couple of weeks. So by mid-March, we want to have some of the things that we've talked about. You know, fungibility is probably a bit of a kind of complex one to bite off in a fortnight, but certainly maybe the trading floors, or a leverage position, or some of the other kind of special unique things that Bumper can give rise to. We want to start launching those in the next couple of weeks. The trading competition is obviously just a really key kind of marketing endeavor for us to kind of start to get traders to play with Bumper, to understand just how cheap it is to use. You know, we're talking about 0.03% per day to protect yourself. I mean, that is astronomically efficient compared to prices out on the market. And if you can use that to generate profit, then we want to showcase you. We want you we want to support you, and we want people to know how Bumper can be used to, you know, take even a bullish market that we have now and make even more profits that you can kind of take off the table. I know that we're engaged a company that we're going to go live on a dashboard on our protocol on our website that will give much more insight under the hood into what actually is happening with the protocol, so people have like total transparency there. We're bringing online a referral program so people who use it and like Bumper and value the efficiency and the cost, the cost best in market price that we offer, and want to kind of share that. We will reward you for that. So there's like I kind of said before, you know, we've built the technology stack. We have the winds behind our sails. We have a macro market that is looking very positive and pumpy. We really want to position Bumper and the Bump token to benefit from that and deploy all that marketing, all that technology stack in a really in a very careful and considerate way, so that we can kind of capture the mass market attention.
Okay, and tell me about the phase token utility. What is the plan with that, or what does that mean?
Yeah. So this comes back to a little bit what I discussed before, is that there's what we're calling the token economy, right? So this is where we expand out the utility of the bump token, and we'll do that in a few phases. There are a few things very quickly and easily we can do things like reinstituting the bond, which we had at kind of the start when we launched on Ethereum. What we decided to do was remove that bond, and what the bond is basically you put up an amount of bump token into the protocol when you take out any position, whether you're a maker or a taker. And what this does is it will lock it up into the protocol, and you'll then get it back at the end when you eventually close or claim or just withdraw your position. So it's all safe in the protocol. Now, what this does is it kind of creates a utility for the token, that you will need the token to access the protocol. We removed that temporarily in Arbitrum just to make it a little bit more seamless for users at this stage. But we see that as a long-term important network effect kind of opportunity for the bump token and the bumper protocol. Because what we want to do is get the bump token out there in a lot of hands, and we want to get people utilizing that bump token back into the ecosystem, whether it's being a user, whether it's putting in into the staking module, which will provide some ultimate kind of backup safety to the protocol, or whether it's going into the DAO governance, or you're using it as a liquidity miner. So the first thing would be to put in the bond. The second would be looking at kind of tier structures. So the more bond you decide to put in, then you'll get discounts on the premium, and you'll get increased yields on the earn side. So, and we'll create a couple of different tiers for that. So hopefully that will encourage people to buy more bump and get into the system, because there will be a definite benefit later on down the line. Now, the other aspect is to move the DAO over to Arbitrum ideally. It's fine to run at the moment on Ethereum, but it was always a process of decentralization for us. So we're slowly moving towards that. We're going to start opening that up a little bit more. And there are a few things around DAO that we're also going to propose moving forward for the bump token. So those will be done in phases. So we're going to bite off the easiest through so that we can get some utility for the token. And hopefully that will also interest the market, that if they are looking to use Bumper, they're going to need a bump token. When we say phase, we're just going to do that in phases. And when we present this kind of token economy document, we will present the phases. And what we're going to do is we're keen to get feedback from community. So this will be a fairly good draft, one that's fairly well thought out, but we are definitely keen to get it out into the community and get some feedback on that, so that we can also shape the bump token future around what actual users and community want from the token.
I mean, it's worth mentioning there's also a very clear commercial business imperative. And what I mean by that is the bumper protocol by design becomes more efficient and more robust to market volatility the greater the token price goes up and the greater the protocol TVL goes up. So this is the kind of business competition that we're in, is that we're the first one to crack this type of protection. We know that. What we know is that we can build a garden around us. If we're the first to market and we kind of grab that opportunity, and we see the token price increase and the TVL increase, Bumper will become by de facto the most efficient and robust place you can buy your protection. So we are now very fixed on strategies that support those two kind of aims, TVL and bump price increasing.
So you essentially have built this box. People can put their stable coins in to earn some yield, but they really it's simple. The box that handles most of it. They can put it in. They can say they have Bitcoin and Bitcoin hits 65,000. They want to hurry up and protect it. 99%, they can hurry up and protect it. what's to stop you from integrating from, say, major exchanges or major players out there that just take Bumper, integrate it with what they have, so that somebody who buys Bitcoin there and buys $100 million worth of Bitcoin, obviously you would have to have the liquidity to be able to handle that, can just then hit a button, say, Bumper it or protect it, right?
Yeah.
Which essentially then Bumper then handles, and it then becomes integrated with this thing behind the scenes, because it's like a magic black box that you could then take this, it would seem to me, and integrate it with DeFi, with even centralized exchanges.
100%
on this side of it.
And I think that speaks to the versatility of the machine that powers Bumper. It can do that. It can on the fly, generate that kind of protection position for whatever kind of asset you kind of have. So we are in discussion with, we are being approached by large sexes. We had a call, I think it was this week, actually, beginning of this week, with OKX, reached out to us. They have looked at our technology stack. They're interested in how they can start to kind of bring that to certainly some of their institutional clients. But the ultimate aim, like you say, would be to have that protection button, on a centralized exchange like OKX, have it something like Revolut or Robinhood or MetaMask, so that you can just, within your wallet, just click a button and have that comfort that you've instantly protected your asset.
I hope all the viewers were able to stay till this part, because this is the golden part. Like, a lot of times people have a hard time seeing the future, right? They're like, okay, I kind of get where we're at. And they don't then extend that to where this could be. And I don't know if it takes 6 months to get there or a year, but it seems like a massive advantage to a centralized exchange to be like, oh my gosh, you can do something our users would love, and we don't have to innovate it ourselves. We can just integrate you. How do we integrate you? And then once one does it, they are like knocking down your door to do it.
Yeah, we want
and
that.
Then Bumper becomes talked about by every crypto channel out there as the most innovative thing since Uniswap. That makes sense to me.
Yeah. It's just finding that little key that kind of, then everyone wants it. So
right. The first couple use cases where they're like, hey, wow, could you do this with my exchange? And then they get working and everything. And then every other exchange is like, they're talking to their chief operations person saying, why haven't we done that yet? Why did they beat us to that?
Yeah.
Well, sure. We hadn't heard of them. We didn't know about them yet, right? And kind of like Uniswap. Uniswap was around for a couple years before DeFi even took off, and nobody knew about it or used it, right? So it just kind of takes a while. You can build the biggest, best box out there, but sometimes it takes a little bit for people to hear about it. And then all of a sudden it's like slowly and then suddenly is what it seems like.
Yeah.
Yeah, for sure. And I think that's definitely the case with this DeFi. I think the beauty of DeFi is the kind of composability of those Lego blocks, right? And so, we are talking to other DeFi protocols of like, well, you can plug your thing into Bumper and protect those assets, stop liquidations, perhaps in lending. We know that's something that Bumper can do. Those days will end, basically, because you'll pay for a service that protects you from that.
That's so amazing. Those that haven't participated in DeFi, and DeFi, the last big run on DeFi within that narrative was 2021. So if you weren't heavily involved in crypto before then, you would have been brand new, and DeFi probably would have overwhelmed you with how to do it. But there were a lot of liquidations. People would borrow against their assets because there was no way to protect them or take a protected position that was then unliquidatable. And so taking a loan against your crypto was very risky because it could drop 50% and then your position would be liquidated because there was no way to take a price protection against it.
For sure.
It's one of those classic difficulties when you're kind of at the cutting edge of innovation, is that often it takes the market a bit of time to kind of realize what you were doing in the first place, and we've seen that just time and time again over with all the kinds of big companies in the world. The other thing to kind of remember is that there are things like, a big one is like DAO treasuries, for example, right? It's a good example. That becomes quite a hard thing because they've got relatively rigid mandates on what they have in their treasury and what they can do with it. A DAO by its very nature is kind of slow moving thing. People have kind of councils towards it, advise, but proposals still have to go through. You're trying to gather thousands of token holders to try to make a decision. There's lots of forum stuff. So if you could be in a position where you're kind of wanting to take some kind of very basic strategy to secure your treasury, then something like Bumper is actually quite a simple process. You can throw your treasury in there and let it sit there, and that decision's been made, and there's no kind of active management. There's nothing like that you need to really fundamentally worry about, which makes it much easier for those bigger kind of situations that are hard and rigid to move. And different institutions or different kind of funds and stuff will also, some will be quite rigid. They won't make moves often. Others are far more trading, active trading strategies, but they can also use Bumper because we're showing that we can act as a really good trading tool. So it's worth noting on those things.
Yeah, like, and one of the implication I've seen from that is way back in the crypto space in 2017, 2018, ETH hit $1,400 per ETH. And there were a lot of projects that raised their funds in ETH, and they're like, okay, we have $20 million. And then ETH went down to $300, and they're we don't have that
runway's gone
on our project because they didn't have a way to bumper it. Imagine they could have bumpered that; it would have taken away their downside risk.
For sure.
Yeah,
for sure.
Absolutely. Yeah.
Well, gentlemen, thank you so much for joining us for our stream. I would love, we are live, and so I haven't caught up on some of the comments. Hadn't had any direct questions, but Rivian said, great show, Rain. Welcome, Bumper team. Told everyone to smash the like button. Mateus is asking for a Bumper price prediction. I would have to tell you that on a different day. I really don't ask project teams to talk about the price, just so regulators don't come knocking on their door. Good morning, Rainmaker. Thank you so much for all the work about me, Rain. I'm really looking forward to our interview next week. Jonathan Game Trove is having you guys on next week. Shout out to him. Corey Beach says, I've been following Bumper for 3 years due to the exposure from this channel. Thank you, Jay. And thank you, Bumper team. Bumper is my DeFi token for the cycle, Jay. As always, impressive content. Love it. Thank you so much for joining us. We are going to then do, for those in our private Discord, we're going to do a private stream where you can ask your questions directly if you want to join the StreamYard, or if you want to watch passively on the private YouTube channel link that will be put in our private Discord. You can do it there. Thanks, everyone, for joining us. We'll see you all next time.